Hello, welcome back to my channel. So in today's video, what I thought I would do is actually kind of go back a little bit, and I thought I would make a video in terms of the steps that I took to actually start investing in the stock market, because I know that investing is something that a lot of people want to do, particularly women, but they have no idea, where to start. And so I thought, why not share my experiences with actually investing in the stock market, so hopefully it can prove some inspiration to you, and also we can take a look at my portfolio nearer the end as well, if that's something that you are also interested in. So just as a quick reminder, I am going to be covering investing when it comes to my weekly YouTube lives in January. So if you have no idea what I'm talking about, I have actually started doing weekly lives on Sundays at 7:30 p.m. GMT only in the month of January. So I will be covering investing in the last week of January. So make sure you are subscribed to my channel so you don't miss out, and also make sure you check out the other lives as well, because that's going to help you really build a solid foundation so that you can also start thinking about investing as well. So of course those will be linked in the description below for you. So just for some context, I actually started investing in the stock market in 2020. Now, the one thing that I will want to mention, and I kind of want to talk about, is the fact that I actually made sure I set a solid financial foundation before I actually started investing in the stock market. And so what I mean is that I did not have any consumer debt whatsoever. So I was in consumer debt and I actually ended up paying that off. And then I also saved up for an emergency fund, as well as other expenses that I needed to save up for. And so I thought it was worth mentioning that, because I see a lot of people trying to start investing as soon as possible, because obviously people will tell you, in order to build wealth, you do need to start investing, which is true. It's very difficult to save your way to wealth, but I want to stress that you want to make sure that you are in a great financial position so that when you start investing, you can almost treat it as something that's quite separate. Because what you don't want to do is start investing all of your money, and let's say an emergency comes up or you have to pay for something. If you do not have cash, so if you don't have any reserves, what might happen is either, number one, you may have to end up going into debt to go and pay for that expense, or you might end up having to actually sell your investments. And so what could potentially happen is that your investments may have gone down. So when it comes to the stock market and really anything that you probably invest in, it's not always a straight upwards trajectory. There are going to be short-term dips along the way. And so what you don't want to find is the fact that you now have to sell your investments, but you end up having to sell it at a loss because the stock market has gone down. So it's really important to have such a strong financial position first, so that when you actually start investing, you don't have to worry about any of those short-term swings. And if you're interested in learning how to actually set a strong financial foundation, then definitely make sure you check out my free money management guide, because that includes all the steps that I took to really make sure I was in a strong position when it comes to investing. So of course I'll link that up here for you and in the description below. But as I mentioned, I had actually paid off my consumer debt, and I also had an emergency fund before I started investing. So let's talk through what happened after that. So before I actually started investing my money into the stock market, so before I actually took my cold hard cash and started investing, there were a couple of things that I actually did as well. And so what I decided to do is, before I would actually start investing, I really needed to get clear on my financial goals as well as my attitude to risk, and that would also help me identify my strategy as well. So let me talk about that in a bit more detail. So when I'm talking about clarifying my goals, what I really mean is I needed to figure out what I actually wanted to achieve in the long term, and how was investing going to help me get there. So how was investing going to be the vehicle to basically help me reach my financial goals? And this is something that I see a lot of people missing out. They actually don't really understand what they're investing for or why they're investing in the first place. So for me, clarifying my essential goals was going to be really, really important. And so as an example, I really wanted to achieve financial independence. That's one of my biggest long-term financial goals. And so with that, I basically needed to figure out, what does financial independence mean for me? What does that mean in numbers? And how is investing basically going to help me get there? And that was really useful, because it was also going to help me identify my strategy when it came to investing as well. But once I also set my goals, I had to think about my attitude to risk. And so what that means is that I had to actually ask myself, how comfortable am I at taking risk? What kind of things would I be comfortable in investing in? And if I do have any kind of short-term swings, would I be comfortable with that? Because that's going to have an impact on your strategy. Again, I think this is something that people tend to miss out. They kind of just invest in anything and everything, And so essentially what could happen is if they invest in something which is very, very volatile, they could get very emotional about it and they might end up getting really upset. Maybe they start watching the news and the news is telling you about the stock market has basically gone down and everything like that. And so what that means is because you haven't actually assessed your risk levels, you are investing in things that you potentially may not be comfortable with if they actually take a downturn. And so I had to really ask myself and figure out how comfortable am I at taking risk, because that was going to help me identify what kind of things I would want to invest in. And if you're liking this video so far, then feel free to give me a thumbs up, as it really does help to support the channel. Plus, it's free. And so once I understood my goals and I also understood my risk tolerance, that allowed me to basically formulate a strategy when it came to investing in the stock market. Now, I should say that investing in the stock market wasn't the only thing that I wanted to do. So I did want to diversify, and what that just means is that you're not putting all of your eggs in one basket. So yes, I was interested in investing in the stock market, but I was also interested in building my own business as well, and also maybe investing in real estate in the future, so things like property. So I kind of had those three things, but I focused more on stock market investing first because for me it was probably one of the easiest things, just because you don't need a lot of money, whereas when it comes to real estate you need quite a lot of cash depending on how you're actually investing. And then also when it comes to building a business, that also takes a lot of time. And so for me, I really wanted to get started with investing, learn how to master it. So I decided to first really focus on the stock market whilst I was also doing things like YouTube videos as well. And so when it came to my strategy, what I basically needed to figure out is, based on my goals and based on my risk tolerance, what did I actually want to focus on? What kind of things did I want to invest in? Now, when it comes to actually investing in the stock market, there are also different ways that you can invest, and there are different strategies as well. So for me, when I first started, honestly, I did not want anything so complicated. I didn't really want to have to do a lot because it was something that was obviously new to me and I was actually finally investing my money. So it's worth noting that I had also started learning about investing even whilst I was paying off my debt. It's something that I started doing for months on end, but when you actually now start to invest your own money, it's very different to actually learning about it. And so I decided that I was going to really focus on index funds and ETFs first, and there were specific funds that I actually wanted to invest in. Now, if you don't know what these are, they're basically a basket of companies rather than actually investing in one company. So I will basically hold a small piece of the pie with other shareholders within that basket of companies, compared to me just investing in one company like Apple or McDonald's, for example. Now, if you do want to learn a bit more about that, I do actually have a video where I talk about that in a bit more detail in terms of investing in the stock market as a beginner. So definitely check that video out if you haven't already. I will of course link that up here for you and in the description below. But essentially, when I first started, I really wanted to invest in funds because, number one, of my risk tolerance. So I knew that I was fairly risk averse, but at the same time, because I was quite young as well, when I wanted to start investing, I was pretty much in my mid-20s. So I decided that I would invest in funds because they do carry an element of risk, but I would personally say that they're probably not as risky as certain individual companies that you may invest in, because obviously you're investing in a whole load of different companies rather than just one company. So that's what I wanted to focus on. Another reason why I also liked funds is because I like the diversification. So again, you're able to not put your eggs in one basket. And so for me, starting out, it was just something that I felt really comfortable with. And so I decided to do some research, and then I was able to pick some funds that I was comfortable with, again, based on my goals and based on my risk tolerance. And so it's really worth emphasizing that the funds that I invest in are based on my goals and my risk tolerance. I see a lot of people maybe following different influencers and just pretty much copying their portfolios, but you have no idea what their goals are and you have no idea what their risk tolerance is as well. So it's really important for you to actually do your own research and figure out what is best for you, because what I actually invest in may not be right for you. And so if you do really want to learn how you can actually make your own decisions and really figure out your own goals and understand how the stock market can help you, then definitely check out my one-to-one coaching program, because that's essentially what I do. I basically give you the tools and the education to basically understand what your goals are, how can you figure out your risk tolerance as well, and also to help figure out what investment strategy would be right for you without me actually telling you what to invest in, because I actually don't even give financial advice, but I give you the education and the tools so you can pretty much do it yourself and make your own decisions. So if you would like my support with that, then definitely just book a free interest call with me. I will of course link more information up here for you and in the description below. But for me, when I was first starting, I went straight into thinking about index funds and ETFs. However, when I got used to it and I actually understood my risk tolerance a bit more, that's when I started dipping into individual companies. So in terms of some of the individual companies that I invested in, the one thing I would say is when it comes to that, you have to do so much more research compared to index funds and ETFs. The reason being is because you're not investing in a whole load of different companies. because you are investing in one company. And so if you obviously maybe don't make the right decision, or if something happens to that company, maybe they go bankrupt, you could potentially lose all of your money. And so it's really, really important for you to do a lot more research if you do decide to actually invest in companies. Again, I'm not a financial advisor. I'm not telling you what to do with your money, but I'm basically sharing my experience and what I actually did. And so in terms of the individual companies that I have, I don't invest in a lot of individual companies. The reason being is because, again, number one, you have to do a lot of research when you're thinking about what companies you want to invest in. And so when I'm talking about research, I'm talking about things like actually looking at their cash flow statements, balance sheets, income statements. What is their company structure like? Do they have assets, or do they have a lot of debt? Are they actually making a profit? All of these questions you need to really start thinking about when it comes to researching individual companies. And that can obviously take a lot of time depending on how much research you're doing. So for me personally, I don't invest in too many individual companies. A lot of the individual companies I have in my platform are basically just free shares. So I tend to just leave them, and I don't really tend to do a lot of research because they're basically free. But the companies that I actually invest in with my own money, that's when I actually have to do quite a lot of research. And it doesn't stop there once you've even chosen the company. Really and truly, you should be looking at their earnings statements and just making sure that it's still a company you still want to be investing in the future, because you may find that maybe the way the company is going, the direction is going, is something that you're not really interested in. And so basically that is why the majority of my portfolio are ETFs, because I don't really want to have the hassle of actually researching so many individual companies, even though I do actually have a few individual companies that I was interested in, but I did actually enjoy doing that research. So again, it's really going to depend on your goals, your risk tolerance, and the time that you have as well, and whether you actually enjoy doing all of that research. So as an example, I may as well show you one of my portfolios now, especially if that's something that you were interested in looking at. So this is through a platform called Trading 212. So this is where the majority of my portfolio is held. I do also have another platform called FREETRADE as well. I'm also use the Trading 212 platform more than the FREETRADE, but I essentially still use both of them. So in terms of my portfolio, you can see that I have over £3,000 in there, which is probably around $4,000. And currently my return is 12% at the moment. So up by £338 at the moment, which is maybe like $400 to $500. So this has actually dipped slightly. So it was actually up 15 to 16% a few weeks ago, but it's slightly dipped. And that's because some of the companies that I've invested in, they've taken a bit of a dip as well. But as an example, I mean, I have a share in Apple. So again, I had to do quite a lot of research to invest in that. I do have a few free shares. So things like Bank of America, those were free shares. I invested in Coca-Cola, so that's something I personally invested in. And then you can see there's a few ETFs that I also invested in. National Grid was a free share, and so was Shell. Smile Direct Club, you can see that's down by 71%. That was also a free share. That is not a company I invested in. And I had actually been thinking about selling that share when I got it, but I decided to keep it in and see just how it would perform. And right now it's down by 71%. So probably should have sold it at that time, but it's okay. I'm just going to leave it there. And then again, I have another ETF, which is the S&P UK Dividend. And I also have Tattooed Chef. So this is a growth company that I invested in. And when I'm talking about growth companies, what a lot of these companies will do is that they are basically looking to grow and expand. So a lot of the profits they have, they will reinvest it back in the company. But you can see that even though I invested in a company like Tattooed Chef, it is currently down by about 24%. And so this is where I go back to understanding your risk tolerance, because you need to figure out whether you'd be comfortable if your investments actually went down. So you can see that there's currently a mix. So currently it is down by about 24%. So you would need to ask yourself, is this something you're comfortable with? Personally, for me, based on my risk tolerance, it is. I honestly don't mind if I still see that the company has strong fundamentals. And so that's why it's really important for you to understand your risk tolerance, particularly when it comes to actually investing in individual companies. Another one I have is Uber. Again, that's not something I personally invested in. It was a free share. Unilever is a company that I invested in, and it's currently down by 11%. And then the last two are based on ETFs. So I've got the FTSE 100, which is by Vanguard, and that is basically the top 100 companies in the UK. But I also have the FTSE All World ETF, and that is the majority of my portfolio because it's very diversified. So in terms of the companies, it's not just, you know, the US or the UK. It's pretty much basically companies throughout the whole world, and these are like the top companies as well. So that's why it's the majority of my portfolio. But again, it's based on my risk tolerance and also my goals too. And it's also worth noting that particularly when you invest in things like individual companies, there's still quite a lot to learn as well. So there's a lot of things that you do want to start thinking about. But for me, when I actually first started, that's why my main focus was on ETFs, because I didn't necessarily have to think about all of that stuff. So I really hope that kind of helped you kind of maybe see how I actually ended up starting to invest in the stock market. And again, if you need further support with that, particularly if you're maybe scared of investing, then I do obviously have one-to-one coaching available to help support you with that as well. So if you did like this video, then please do give me a thumbs up if you haven't already, and let me know in the comments, are you planning to start investing this year if you haven't already? I do post every Tuesday and Friday, so if you would like to know more, then of course you can subscribe to my channel, and I will see you guys on Friday.